By the way, I'm trying a little different angle here, so hopefully it's not too intrusive. I don't know if the sound is gonna come in better or worse. We'll see. And after taking through the account, I want to talk about an update on Alibaba. It's been due. It's overdue. It's scoring new lows in Hong Kong right now as we speak. I think it's probably around 130 US at the moment, maybe a little bit over. And I'm going to speak about that. But first, let me take you through the account. If you want to skip through the whole account info, then just watch for, you can skip ahead until you see my face like this again. And that's when I'll be talking about Alibaba a little bit more in depth, okay? So, first of all, here's the account. I'm about $8,000 lower than I was before the weekend. I'm sorry, before Black Friday. So I managed to close over the $200,000 mark. So that did happen. So new record, that's great. But then I was greeted with a $10,000 down day, more or less, on Friday. I think over 10,000 actually. So I'm gonna go through all the positions. You will see them over here on the right, starting with the option place. You see the ticker symbol, strike price, caller up, put, expiration date, number of contracts, seller or buy. You see the dollar amount as well as the percentage change of the day. I'll quickly scroll through them. You can pause the video at any moment to try to figure out the exact positions. All the information is listed on there for you to view if you are so inclined. This is the equity positions. Apple is actually carrying my account big time right now. If it wasn't for Apple scoring all-time highs, this account would not be looking good. It's very Ebix, Alibaba, JD heavy, and now VipShop heavy. So, and all those names are not doing that well. A lot of India slash Asia slash China in there. So we'll see. These are the equity positions here. Realty income is somehow doing well in the face of inflation fears, right? So realty income doesn't really work well with inflation now because they only raise the rents about 1% per year in the contract. So if inflation's higher than that, then theoretically they're losing out, right, on their long-term leases. So sorry, I'm trying to stay close to the mic. I don't know how it's gonna turn out. We'll see. Goldman Sachs, the VIPS position, VIP shop position, or VIP shop, whatever, is quite large now. So I exercised some puts, and now I have $11,000 worth of VIP shop in the bank. So for an average cost of 1088, I have another 9 puts, 9 $10 strike puts that will expire on December 17th, which will make me purchase another 900 shares on top of the 1140 I have right now, putting me at a little bit over 2,000 shares of VipShop, so quite a bit. But this isn't about my VipShop position. I talked about it earlier, and today I'm going to focus more on Alibaba. That's the account, by the way. If you're interested in the let's see, in the investing tab, this is what it looks like here. I have $47,000 in margin right now, representing a little bit under 20% of the account. And these are positions listed by total return, and then by equity. By equity here. So Ebix is slacking a little bit. It had a really nasty Friday. I think it was down like 11% or something like that. So, oh well. We'll see. I have a lot of option plays around it, so collecting some premium there to hopefully balance out the loss. I'm curious what happens tomorrow. I know Alibaba's down, so I don't know if the U.S. market will buy it up or just pile in on the crash. Okay, so options positions, equity positions, done. Let's talk about Alibaba here. All right. So Alibaba is scoring new lows, and I just quickly looked a little bit back in history, and I saw that Alibaba had 1/4 of its revenue in 2017 when it was at this price. So the company's grown 4 times really, and the price is basically the same, which is kind of insane. Now the metrics um, aren't that unbelievably undervalued. I mean, compared to American growth tech stocks, like yes, it's very undervalued. But compared to a regular company, it's really not. Let's go into a little bit of the metrics here. I know people might say that I'm crazy, but this number on the top left here is the revenue. I'm sorry, the market cap, $366 billion market cap. This number here is their income. So it's quite a bit lower than the market cap, right? The PE of this company is only it's 18.6, which isn't that incredibly low. It's not like we're talking VIP shop here, right? It's not VIP shop numbers. So I guess Alibaba still has room to correct. I mean, the thing about Alibaba, right, is that hold on, are you seeing this? Yes, you are. The thing about Alibaba is that oh, what did I do here? Sorry. I'm trying this angle right here. It's the first time I'm trying this angle. So I don't know if it'll improve the sound quality or video or whatever. The thing about Alibaba, right, is that it's got it's got so many potential aspects to it. It's got a segment for cloud growth, right, and it's trying to really grow internationally, and it's kind of the go-to app for international shoppers slash investors slash businessmen to try to get product from China. And they have so many offshoot businesses, right? They have the Ant Financial, they have the AliExpress and all that stuff. Like, if you're talking about international, like Alibaba is the way to go. I don't see no business people, importing product from China through JD or any other app really. So Alibaba is kind of the global player, and they're trying to, reach outside, especially in Asia and I guess Europe now, to try to figure out if they can service some of that population in a good way. I saw them speak. I don't know if I saw. I guess Jack Ma's a little bit out of the picture, but I saw him talk about trying to spin, their influence in the region in a positive way, and so I know that their numbers are improving in their international market, and so that on top of the cloud and on top of all the other little tiny businesses they have that are some are growing, some are losing money, but overall there's just a lot of potential in there. It's not like, well, it is a little bit like the tech giants here in the US, where they have a bunch of offshoot companies or companies that they've acquired and they're trying to grow, kind of like Google renamed to Alphabet so they can put a lot of more little segments of the company under the umbrella and separate their search business from the rest of their projects. So Alibaba is kind of a conglomerate in that way, where it owns a bunch of little offshoots everywhere. And some of them will grow, some of them won't. But the thing is, like, this company is sprawling, right? It's sprawling through the area, it's sprawling internationally, it's sprawling through all different types of businesses, and it's taking on bigger and bigger challenges. And it not only that, but it's acquiring new users, are getting on the platforms of Alibaba. It's also growing revenues, and so that means a lot. It's growing kind of aggressively. It has slowed down a little bit, and the projections are a tiny bit slowed down, so fine. People can adjust their price targets and earnings targets and revenue targets, whatnot, but it's still growing. Like the company is still, it's not like it's a stagnant company that you're just collecting, the same amount of, earnings each year and satisfied with that. This company is like really active in there. It's not like Ebix's legacy business, right? Where it's like slowly dying and you got to figure out like, you got to discount all that cash flow, right? So, maybe you plan on collecting a paycheck for the next 10 years, decreasing like 10% every year. So now how much would you pay for that? It's not like that, yeah, right? They're like actively investing and reinvesting and trying to really push the envelope here to try to grow. Just like a lot of these Chinese companies, they're kind of, obsessed with growth. So, but, you know, I guess user base, reach, revenue, and all these numbers mean so much to these companies than how much they're earning at the moment. So whenever you look at, or we look at the earnings numbers, especially since they don't have the same type of accounting as we do, these numbers will tell, a different story. So the amount of stuff they put into their final numbers is just different than the way we report it here in the United States. So it's very hard to decipher unless you know the ins and outs of the way they do accounting over there in China. Like, for example, one little quirk is like, if you have appreciation in if a lot of your holdings, because a lot of these Chinese companies own each other. So if you have an appreciation in this, let's say the stock in your portfolio as a company, then you can count that as earnings, right? Which is a bit crazy. So at least that's the way I understand it works. So if I'm wrong, please correct me in the comments below. But so there's a lot of quirks like that that's just, a little bit hard to figure out exactly what the company is doing. But you can't really massage the top line quite a lot. I mean, top line meaning revenue. You can't really massage that. I mean, you can, but if money's coming in, if that number's growing, and especially if you account for it the same way each time, then that's not really easily falsifiable, I guess, unless you're just straight up given wrong numbers and wrong information. So having said all that, I'm still pretty bullish on Alibaba. Still hold it. I have like 2 or 3 options. I have some stock, and that Alibaba kind of tends to trade in lockstep with VipShop and some of the other Chinese stocks there, especially retail stocks. So I'm rooting for it. I don't know when it's going to bottom out. I hear some delisting fears bubbling up again on the articles and the news, and we'll see what happens with that. If it gets delisted from the US, I'm guessing the ADR will just be listed in Hong Kong and the shares will automatically transfer over there. I'm not exactly sure what the mechanism is that people are saying it's going to come into effect. We could lose all our money, or we could just automatically get the Hong Kong version of the ADR if the US decides to delist it here from the NYSE, I think. So we'll find out what happens with that. I'm curious, but as of right now, I'm just going to take the risk, and you got to go big or go home in a way. So the valuations are crazy. So if everything goes right, if the ADR stands, if the contracts between the ADR and the actual company stand, and also the delisting does not happen, although I don't know if that delisting really even matters or not, then really this is a steal, I think. So that's why I'm still invested, but I'm not invested with 100% of my account, right? Because I could lose. It's kind of a coin flip at this point, what the regulator's going to do, whether or not there's going to be hot war kind of tensions between a few unnamed countries in that region. So we'll see what materializes. But if there is a hot war, I mean, my investment account is the last thing I'll be worrying about. So it's really just worth taking the risk, for me personally. All right, let me know if this video, like, vision thing is annoying or the lighting is off or something. I'm actually standing up right now. I'm just trying something different. I have a stand-up mic stand that I use for other things, and I thought I might try it. So let me know if it's okay. Let me know if the audio is all right. Maybe it's better. Maybe it's worse. But I know my speaking is not going to be any better. So, but that's it for now. All right. I'll update you probably next Sunday if I can. Bye, guys. What the heck?